The car market is sinking like a rock. Yes, in fact, is that actually happening right now as we speak? Well, first we have to tell a story about where we were at 3 short years ago. Back in the beginning of 2020, the car market shifted entirely to a new place. Everything we knew about buying a used car has shifted. Back in the day, in 2017, 2018, buying a used car that was about 3 years old meant that you'd get yourself a great deal, a late model car with low miles, and you usually got it at only 50, 60, or 70% of what it cost for brand new. New cars represented a massive ripoff, and you only bought one if you really needed it or you had a lot of extra money to spare, and it just seemed like the right thing to do, or you wanted to show off, so you'd buy a new car. Those were typical phenomenons, but then 2020 hit, and that little thing came along, that bug, that thing that everybody started talking about, and all the shutdowns and lockdowns started causing problems for everyone. And as it did that, it created a situation where people had to stay home. People were getting nuts, feeling so well, and of course a lot of workplaces actually closed. That directly impacted supply chain. What's supply chain? Well, supply chain is where the process in which they feed products to the end product. So obviously you'll supply this little widget to this end complete piece. So you might need a car, and it might need 10,000 little widgets. All those little 10,000 widgets come from many different suppliers, and they go to build this one complete vehicle. But unfortunately, supply chain was cut off at the knees simply by the fact that a lot of people were at home. Factories were closing down. They couldn't get processors, chips, all the microelectronic bits and pieces that would go into these vehicles were no longer available. And so what you had were some factories that had the testicular fortitude to press on and continue building their cars, but other ones didn't. They just completely closed the factory. Either way, whether you ran or whether you didn't run, there were some critical parts, microprocessors, chips that ran your ABS systems, your electronics, your screens, your displays, your safety programs. Everything that operated a modern day vehicle was no longer functional because you couldn't get those chips in time. A lot of the manufacturers were having to sit on a lot of vehicles. Vehicles were 95% complete, loading up their back lots, and they just couldn't do anything with them. They couldn't get them finished off to get it to the customer. That was a bad time in 2020. We evolved from there. Then as we transitioned to 2021, of course, the continuation of what we saw, where people were at home, there was a shift all of a sudden. As we transitioned out of 2020, 2021 comes along, people were at home, and there were some people, they were buying frivolous expenditures. They didn't need it. The governments were throwing handouts. And so they were buying toys, expensive exotic cars, sports cars that they didn't necessarily need. Those markets were going up. ATVs, boats, all those things were going up because people were at home. They were getting handouts. They had time on their hands. They didn't have to work. But some of them weren't traveling because you couldn't travel with all the bans. And so what that generally meant was you had to sit home or you find other means to enjoy yourself. So a lot of people would buy toys because they couldn't travel overseas. They couldn't travel to go to Europe or, Asia or anywhere else, couldn't take a cruise or a flight. And so they started getting creative. So those markets climbed. But then things changed. And of course, with that evolution, people were starting to get back to work. Some of the demands for people working at home, some of those restrictions were getting lifted, travel bans were getting lifted, people started moving around a little bit. Work sites started opening up. People started going back to work. Some people, well, they worked remotely, but a lot of people actually wound up going back to work in the workplace. That drove up the demand and the need for vehicles, both new and used vehicles. Unfortunately, we're now going to shift into a very strong place. People had that extra money and they were coming out and they're like, hey, I need that great new car. I want to take something new to work to show off my coworkers. Look what I have. So all of a sudden you went from a place where there was a hollow, no demand, there was a lot of backlog. The microprocessors, the chips started to hit production, although there was a serious backlog and manufacturers still couldn't get them into the vehicles quick enough. But now all of a sudden demand drove through the roof because people were working again. People were slightly traveling again. And now they were buying some of these cars. But the vehicles weren't on the lots. The vehicles were not complete. And so there were shortages. There were shortages on chips and other supply chain parts. There was also supply chain vehicle shortages. You couldn't get cars and trucks, and car lots were emptying out, and you just could not get yourself a new vehicle. And that is where we came to what has started transpiring into a market that we've never seen before. Now, the real question is, are we ever going to get back to those early conditions, 2015, 2016 market times where we've seen those traditional market experiences with vehicles and the way they held, or the depreciation rates and all of those, and the purchasing buying power that you had back in those days? Will we ever see that again? And some sobering statistics from March 15, 2020, all the way up to April 4th, which was only a matter of a few weeks. Did you realize almost 17 million unemployment claims were filed? That's right, people were losing their jobs left, right, and center. As a result of that, people weren't buying. And as I say, buying went down in 2020, and throughout the year, the challenges were real for manufacturers to both get the vehicles to market, but also even try to pitch those vehicles to consumers or would-be buyers. So things were very challenging. What they ended up having to do was market their vehicles very aggressively, offer up aggressive incentives, offer up zero loans, lending rates that were almost nothing, lease rates that were almost nothing. Just to get a small margin on the price of the vehicle, they were willing to lend at almost no rate. On top of that, you didn't have to be a prime buyer. All you had to do was a subprime, willing to sign on the dotted line, and you could get yourself a new car. There was so much excess, as a matter of fact, most manufacturers were far exceeding 90 or 100, 110, 120 days supply at any time, when the norm is only 50 or 60 days supply of any general manufacturer. So clearly they had too much inventory and not enough demand, and that drove the aggressive activity, of course, by a lot of these manufacturers to try to motivate buyers to bring them into the doors. And as 2020 rounded out, that's when the whole market flip-flopped, and then we saw unprecedented situations. We actually saw cases where, unless you were able to get yourself a vehicle and secure yourself a new or used vehicle within the first quarter, first third of the year, then you were going to be literally crap out of luck. As a matter of fact, it changed from they couldn't give their cars away to a place where you could no longer get one. You had to be really aggressive. There were bidding wars on old crappy jalopies. There was bidding wars on junky used cars. There were bidding wars on new cars. It drove MSRP sticker prices up. Manufacturers saw that. They saw the desperation. They took advantage of it. They actually started cranking up prices, reducing some of those incentives. And then even the used car market also went up, because as you were finding it more difficult to get your hands on a new vehicle because of the backlog, they were still playing catch up on the used vehicles because of supply chain challenges. Then what you had was a scenario where if you couldn't get that new vehicle on time, or you didn't want to wait for that year and a half to get your new vehicle, then you had to scamper around, look for a used vehicle. Well, guess what? That started the trend. Now all of a sudden, used cars, as we said a few minutes back, typically a 2 or 3 year old vehicle is only worth about 60 or 70% of what that brand new vehicle is. But as we rounded into 2021, as we hit sort of midway, all of a sudden we saw a market that, because of the strong demand on the used market, and they couldn't get brand new vehicles on time or didn't want to wait, people were willing to pay as much as sticker, in some cases more than sticker of that brand new vehicle. You could get yourself a brand new Toyota Tundra for the same price as a 3-year-old Tundra. There was cases of people talking about, getting themselves Tacomas and some of these highly sought after vehicles, reliable vehicles, vehicles with good reputations, vehicles that were highly sought after, that were hard to come by, and people were willing to pay more than the sticker of that new vehicle just because they didn't want to wait. As long as it looked like it was in decent shape, you turned the key and it ran, people were buying it. So that's where things evolved, and things were getting desperate. There wasn't enough supply, and all of a sudden we had way too much demand. But then the supply chain challenges continued to exist. And of course, the buying continued on. Buyers kept buying, they kept wanting more. The drive and the motivation by buyers to get out there and get more vehicles, more people were coming back to work, more people were getting their jobs back. Now, of course, there's more buying, but the manufacturers couldn't necessarily get enough vehicles to the market to satisfy the demand. So all they did was they started marking up some of the vehicles, realizing, wait a minute, we can't keep up with the supply chain chokes anyway, so why don't we just sell the higher margin vehicles, pickup trucks, SUVs, for a higher margin, get our profits out of the deal. We don't have to sell the volume. We just need to sell the margin and get that vehicle to the market at a much higher margin. We don't have to provide incentives, and we can make more money by selling less cars. Unfortunately, then they look at the other end and they're saying, okay, well, the used car market, let it fend for itself. But unfortunately, those same dealers had to put used cars on their car lots too, because some of these customers then couldn't get the new one and they were start sniffing around looking for other options. So then even dealers were struggling, getting vehicles from auction, getting vehicles from leasebacks, getting vehicles from trade-ins were few and far between, especially quality vehicles. As a matter of fact, during that time, I did a lot of sniffing around myself, and I saw in some car lots, 5 years earlier, you would not find an earlier generation, a 5 or 8 year old vehicle on a car lot, on the used car lot. They wouldn't even bother. They would go straight to auction because they considered it junk. But as we hit 2021, they were taking anything. I saw rusted out, clapped out, broken fenders, punched in grills. I saw vehicles with washed out headlights and scratched up rims and high miles and accident history, flood history, vehicles that you would never even want to touch. They were now putting on their car lots with a window sticker on it because they didn't have inventory and they still needed to make the market go around. They still needed to try to satisfy that space and still capitalize on strong buying opportunities or selling opportunities to the buyers. Okay, so you're probably asking by now, is the bubble bursting and are these prices about to sink like a rock? Well, let's continue the conversation because other things have happened. As we hit 2022, all of a sudden there was other challenges. We know the chip shortage was still real. There was still some backlog, still trying to get some of those chips into some of these modern day vehicles so manufacturers and OEMs could get them back on the lot. Unfortunately, now with the war that we're seeing with Ukraine and Russia, that kept on. So a lot of wiring harnesses and a lot of other supply chain challenges existed there because they were some of the suppliers to vehicles that were typically built and sold in the United States of America and Canada. And therefore, because you couldn't get wiring harnesses and chips and other odds and sods and water pumps and components and radiators, a lot of these parts were no longer available or harder to come by. That continued the trend, unfortunately, in 2022, where it was a very difficult time to get your cars in short order. Things were getting desperate. So January of 2022, all of a sudden, people were paying an average of 12.2% for a brand new vehicle over the year before. Used vehicles were up 40% from the year before. So clearly, strong demand, limited supply, driving prices upwards. Are we ever going to recover from that? It was so bad, in fact, that 82% of buyers of new cars in January of 22 paid over sticker. That's right, over sticker as opposed to 2.8% the year before, according to Edmunds. So when are those prices going to actually drop? When are they coming down from pre-2020 prices and actual market properties? When are we going to see that? Is that happening now? Let's continue. So is this the time when everything switches back? Well, I'll just tell you, Cox Automotive has a lot of statistics showing this, and a lot of statistics are out there to actually display what's going on. And the fact remains is we have in fact hit the peak, and yes, we've turned a corner. How much? Well, we've turned a corner because now what we're starting to see is new car prices are starting to become more incentivized. We're getting a lot of vehicles, particularly from groups like the Stellantis, or Dodge, Jeep, Chrysler products. We're getting GM, Ford, a lot of their vehicles, they have excess on the car lots. Now there's motivation to sell more of those vehicles. Now they did scale up because of a lot of issues that they were going on with some UAW strikes. However, a lot of new manufacturers started to get more vehicles on the lot, or even if you had to buy one, the waiting time wasn't as aggressive. We've also seen some shifts in the used market and certainly in the wholesale market. So at the auctions, we're seeing a lot of changes where dealers aren't buying a lot of these cars now. They're getting that inventory back. They don't want so much inventory anymore. They have too much new cars now starting to build. Inventory is starting to accumulate on a lot of these lots. And there's less demand for these dealers to buy these used cars from auctions. And the wholesale prices are starting to decline as well, which eventually, of course, trickles over to the retail market. Clearly, we're starting to see a decline in used car prices as well as new car prices. So is this ever going to get back to the reality of what we had before? Let's just say that normally the collection of all manufacturers selling vehicles in a 1-year time frame is around 17 million units. Unfortunately, 2020, we were down to about 14.5 million units and about 14.9 million units in 21. And of course, that sounds like a lot. That's clearly a significant drop in years over years. So obviously it's, a lot of these manufacturers, OEMs, are starting to feel the burn and the pinch. They're trying to keep their lights on. They're trying to keep their doors open, but it's not always that easy. Normally the pre-owned market is about 3 years outside of the new car market. So we're seeing shifts. And that's largely because of lease returns, lease backs. Unfortunately, people weren't buying. So if we scale this back to 2022, people weren't buying and they weren't taking on the leases like they were in years before. Unfortunately, that translates to that delay. So lower numbers all the way from 2021 and then of course through 22 on the lease side translates to less vehicles coming out on the used car market. Less cars on the used car market means we're probably 3 years out from 2022, meaning I wouldn't expect to see a significant increase in volumes that are available until at least 2024, 25, possibly even beyond, when volumes on the new start hitting the market, people are buying, and then the leases are heading back out on the back end 3 years later. So are we in fact ever going to see pre-2020 levels again? Well, here's what's going on. Let me explain. I'll get to that because basically car manufacturers are shifting their profiles. They're shifting the way they do business. Their business model in general has altered. They quickly realized that they didn't have to sell as many vehicles. And I've said this already. They didn't have to sell as many, but instead of selling those little nickel and dime vehicles for a small margin, instead they're realizing that we can get a lot more money out of the big vehicles, the big F-150s, the big Chevy pickup trucks, the big SUVs. They can fluff a lot more margin into that without anybody even noticing. And because there's more margin there, they don't need to sell as many units. And they're going to continue pushing that whole philosophy. They're going to continue trying to push their higher end, higher volume, or lower volume cars, higher end vehicles that get them more of that margin. And that's going to continue on. Now, yes, you'll be able to get those lower end vehicles, but some of those are going to be harder to get. There, as a matter of fact, a lot of these car brands are discontinuing some of their smaller versions. Hey, look at even Jeep. They're getting rid of some of their smaller SUVs. Vehicles that aren't selling so well and have lower margins, they won't even think twice. They're gone. So a lot of manufacturers are sticking with what's selling and what has larger margins. What we're going to actually anticipate is the next 3 to 5 years, still a somewhat restricted used car market. As I say, vehicles coming off the lease, there's going to be less of them. People are still trying to fight for those quality used vehicles, and so that just means that there's less opportunity. You're going to be fighting for those. And if there's any kind of competition to get yourself or get your hands on a nice used vehicle, trust me, there's many people behind you trying to do the same thing. That's going to continue on. And unfortunately, we're not seeing this massive influx of used cars on the market. Like I said, even though some of the dealers are no longer that interested and that hungry to grab a lot of used cars off the auction block, conversely, again, they're still pushing a lot of their new products and people are still hungry for quality used vehicles. Dealers are trying to get some of those vehicles to the market, but again, there's more of an appetite to sell the higher margin new vehicles rather than the clapped out used ones with a smaller margin. But where are we at today? Well, let's put it this way. Yes, we've actually stabilized, and I've said this, we've sort of leveled off. With that said, we've only dropped about 1.1% from the new car average price. So we're still over $48,000. So it's only clipped over a little. We've just trimmed an average off marginally. It's inspiring, but unfortunately we're not quite there yet. What is inspiring though, is for the first time in 20 months, we're actually seeing people more often paying under sticker than over sticker. Remember, we talked about the top 3. They're getting especially hungry. They're starting to now provide incentives because they have too many vehicles on the lot. GM, Chevy, Dodge, Jeep, Chrysler, and of course Ford, especially in the F-150s. Now we know other vehicles, they can't even sell. The Lightnings, the Ford Mustang Mach-E's, the electric vehicles aren't selling very well unless you're buying from a Tesla. That's the only manufacturer that seems to be selling significant numbers of electric vehicles. Those two are down though, by the way. So let's just cut right to the chase. This right now could be an interesting time to start shopping around for that new vehicle. Start looking at the vehicle, pick up your configurator, dial in, figure out the car, pre-plan it, maybe build your own. Do all those magical things that make you excited, get you motivated, but don't just pull the trigger yet. This whole vid thing is still coming back on and off in waves. There's still potential impacts. There's still impacts with the war in Ukraine and Russia. There are still impacts across the globe, and there's volatility everywhere in supply chain, meaning that at any one major incident, and all of a sudden we could be back to where we were at 2020. With that said, we're seeing high interest rates. We're seeing less people buying right now. We're seeing car lots filling up because a lot of the supply chain challenges are slowly reducing and a lot more vehicles are sitting on the lot. We're seeing more incentives. Unemployment rates are still quite low and people are still buying. And unfortunately, that continues to keep used car prices high. New car prices are still strong. Yes, while they're shrinking slightly, many manufacturers are providing incentives. The fact remains, this is the time to start looking and shopping. But personally, the bubble is not bursting, the rock hasn't fallen, and personally, I would still hang on for a little bit longer.